Good afternoon and happy Thursday, everyone. This is Scott Wohlers with River Place Capital. It is Thursday, May the 15th, and want to take just a brief minute to discuss what markets did last week, as it was a relatively flat week across all markets last week, with the S&P 500 being down 47 basis points on the week, or 0.47%. The mid-cap index was actually up 49 basis points, or 0.49%. And the small caps led the day up one extra basis point, up 0.5% or 50 basis points, whatever you're looking at. And one of the amazing things is, as we move forward into this week, we are now back positive year to date in the equity markets. We have now seen the fastest recovery from correction to back to above that level, or to above positive, and since 1982. So over 40 years of time has gone by since we've seen a recovery so quick. And this is one of the reasons why it's so important to always stay invested through volatility, is you never know when the tide is going to turn. And we've talked over the last several weeks about how quickly the recovery days happen after bad down days. On average 2 to 8 days after a major drawdown, you have a recovery day. And why it's important to stay invested through that. But one of the things I want to point out that was very interesting is talk through a couple of things of the functionality of the markets, why it did what it did, and why we are where we are today. So April 2nd, we have Liberation Day, or the announcement of higher tariffs than the market was thinking. And then you see a big drastic sell-off where within a couple of days, I think it was 3, maybe 4 days, you saw the market down almost 12% in about 3 to 4 days. So very dramatic moves to the downside as well. And that was on the news of tariffs. And what the thesis was then was that we are going to have higher inflation, that we are going to see a recession and less jobs. Well, what has happened since April 2nd is the fact that we've had a 90-day pause on some of these tariffs, on most of these tariffs, announced in April. We got an inflation report for the month of April last week, where inflation is still coming down. It's ticking down towards the 2% target at 2.3%. Jobs. We got a jobs report last Friday. Positive job growth, 117,000 jobs added. Unemployment still remains at full employment levels. Healthy signs for the economy. And so you're seeing the recovery because of this. And so what happens in markets is they tend to be driven. We're driven all by people, and people can tend to be sometimes emotional in our reactions. And what was interesting is, while the wild volatility was happening in the stock market, for the most part, the bond market was not capitulating, and you did not see wild bouts of volatility. You saw a little bit at the beginning of April, and then when President Trump announced his 90-day rollback, you saw the bond market really stay muted and stay calm during this volatile period. And one of the great indicators of future economic news is what the bond market does, because it's actually a $100 trillion market, where in the U.S., where the stock market's a $30 trillion market. So it was just very interesting that the bond market didn't turn over, and once again the bond market was correct, and we did lead to that quick recovery. So we didn't get that big rush up in inflation. That was the concern. We have not seen job loss because of the tariff announcement, and we don't believe we're on the path to a recession. Corporate earnings remain strong, and we just believe that we can continue that path forward. Now, as we move forward here to next quarter's earnings reports, do not expect there to not be volatility in the next 85 days between us and the Chinese and us and the other countries as these negotiations move forward. So expect continued volatility, not maybe as dramatic as we saw in April, but some volatility here moving forward as deals try to get worked out in a very public way. So as always, if you have questions about how to navigate this time or what's going on in the market, we'd love the opportunity just to speak to you and talk to you about it. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.